new day. It is October 15th. So if you are a business owner, today is the day that you have to make sure you file your returns for 2023. If you filed an extension, okay, we should be live now. I am about to go live. Well, we are live. We should be live now on Facebook, YouTube, and LinkedIn. So doing a couple sound checks. We have the Zoom room opened, but as usual, we have very few folks. Actually, no one is in the Zoom room at the moment, which is totally fine with me because we have generally much more activity on YouTube. I think there we go. We do have someone in the Zoom room. Welcome if you're in the Zoom room. Just if you could leave a message and let me know you hear me, that'd be great. Everyone else who's watching, oh great, thank you very much, Nathalie. Good to see you. So everyone else who is on the YouTube and Facebook and so on, we'll get started in just a minute. Today we're going to talk about investing. So I'm going to share a couple of things. Actually, this is probably the most popular topic in personal finance. And so we have a lot to cover, but I want to just kind of give you a little bit of a heads up. So we won't get started until 10:02 or till 10:05. It's 10:02 right now, and I'm just getting situated. So we've got, like I said, a lot to show. Let me just jump over here. Now what I'm looking at is my iPad. So this is a post. This post, this article, this information. It's a growing kind of. It's almost like a little book about investing. And today I keep updating it, but I did post this in Money Study Group, and I'm scrolling through. Hope that's not making you dizzy. But this is the title of the post, and you'll see this again in Money Study Group. The perfect investment strategy. I have to give everything a different name every time I repost it so that it doesn't go weird on the website. But anyway, this is kind of the focus for today's lecture and for this week's lesson in personal finance, which is investing. The perfect investment strategy we will talk about in just a minute. But I just wanted you to know that if you are feeling like I'm covering way too much information in this lecture, you're welcome to check out the article, which is pretty synced up with what I'm going to talk about today. So my hope, my goal always for this part of the semester is to give you enough information to help you feel confident that you can become a good investor. And the sooner you do that, the better. Just like we talked about bargaining and negotiating, if you choose not to do it, it's gonna cost you. And if you choose to do it and you pick up a few skills along the way and you become a more effective bargainer and negotiator, you will definitely move the needle in your financial life. And that is so true when it comes to investing. And so I'm going to teach you today about investing. So here's kind of, we'll get started. I'm just going to jump through a couple of the talking points up there on the right. The first thing I want you to know is that the perfect investment strategy really does involve your 401k. So we're going to talk a little bit about your 401k here in a minute. As we get started, though, I just want to kind of go over what we will cover in this video and this lecture. And again, make sure you check out that article in Money Study Group. It's also posted on missionalmoney.com. It's titled The Perfect Investment Strategy. So it starts with your 401k. I've taught this same lesson every semester for about 15 years. Since 2012. I guess it's 12 years. Anyway, I always say I start out with these 4 investment strategies that are designed to help you maximize returns and minimize risk. And that is really what these 4 strategies will do. So when I talk about the perfect investment strategy, I'm really talking about a basket of strategies, a group, a number of strategies. And diversification is number 1. And in the article that I posted, I tell a story about Enron. I hope you'll read it. I hope you'll think about it. And I hope you'll put it into practice. It's the most basic and simplest investment strategy there is. And I'm not going to talk a whole lot about it because I want to spend more time on a couple of other, I want to spend more time today on dollar cost averaging, because diversification, it's the most simple, the most basic, the most common investment strategy that you need to know about. It will protect you from risk more than anything. And the Enron story, if you're not familiar with Enron and what happened at Enron, it will help you kind of imagine why diversification is so important. So investment strategy number 2 is asset allocation. It's the single most important determinant of your portfolio's returns. So we're going to talk a little bit about asset allocation. And you can't really appreciate how asset allocation works if you don't understand asset classes. So we'll talk a little bit about asset classes. In fact, I think if I jump over here, this is understanding asset classes. So if we go to equities, that's investing in company stocks, large cap, small cap, mid cap, international. Those are equities, are stocks. And then bonds. Bonds operate very differently. And again, there's plenty of information for you to read and become familiar with each of these types of investments, each of these types of securities. It's a good way to think about them is asset classes. And I'll help you understand why that's so important as we go through the lesson. But I just wanted you to know, when we talk about asset allocation, you really need to understand asset classes. So these are some, when I say asset classes, when we talk about bonds, for example, a bond is a debt security. It's where basically you invest in the company is lending, you're lending the company money, and they're going to pay you a coupon. They're going to pay you a distribution from that bond. There's government bonds, there's corporate bonds, there's international bonds. So when I say bond, when you think about bonds, just know that there's a whole bunch of different ones. There are government securities that are considered bonds, or treasuries, and they're important. And so I just want to plant some seeds today, and I want you to start to think about each of these types of investments, these asset classes, because it's important for you to understand. And it's easy, it's really simple. I know it may seem like a ton of information today, but as you start to just understand each of these types of securities, these asset classes, you will become much more equipped to be a confident and effective investor. I promise you, these are the basic building blocks for becoming a good investor. So bonds, U.S. corporate bonds, international bonds, cash and cash equivalents. So those are some of the things that we'll talk about when we get to asset classes. And there's some of the things you'll read about. So diversification, again, asset allocation involves asset classes, and that's a very important part of investing effectively. Portfolio rebalancing is another one of the investment strategies that I want you to understand. If you just think about your portfolio as a circle, and asset allocation, if you divided your circle into like a pie with 4 quadrants, it's a very simple way to do asset allocation is to allocate each of those 4 quadrants to a different asset class. So you may have large cap stocks, you may have small cap stocks, you may have bonds, and then you may have international stocks. So that's just a very simplistic way to look at it. But if you think about asset allocation like it's a pie, like all of your investments, for example, in your 401k, represent one big circle like a pie, and you cut it into four sections. That's 4 quadrants. That means you have 4 different asset classes in each one of those. And what happens over time is one of those asset classes gets bigger and maybe another one gets smaller. And in relation to one another, they always get bigger or smaller because they started out perfectly equal with 25% in each quadrant. And when one of them grows, let's say, for example, if you follow the stock market, you'll see that U.S. large cap stocks have done really well for like 3 years, just gone up, up, up. And so if you started out 5 years ago with 25% in each of these asset classes, 125%, one quadrant was in large cap U.S. stocks, and it's gone off the charts up. And let's say that you had one quadrant in bonds. Well, if you know anything about interest rates and the inverse relation to bonds in terms of price, when interest rates go up, bond prices go down. And when interest rates come down, bond prices go up. So if you had that circle with 25% of your portfolio in bonds, that quadrant would have shrunk. It may be down to, instead of 25%, your bonds may have dropped to 15%, but your large cap has gone from 25% to now 50% of your portfolio. So just imagine that circle and those quadrants, and then when they get out of balance, what are you going to do? You're going to rebalance your portfolio. And what that really means is you sell off that U.S. large cap. You would sell off, if you're at 50% now, you're going to sell off half of them while that asset class is really high. And what are you going to do with it? You're going to invest that in the other quadrants. So now you can buy bonds at a big discount. So when you rebalance your portfolio, that's what you're doing. You're selling off to take the profit from the section of your portfolio that grew, and you're investing in the section of your portfolio that shrunk. And to do that in a systematic way over time makes a big difference in your ability to build wealth. So again, let's think of this as your 401k. And there is some articles and reading material for you. Next week, we're going to talk about types of accounts, and we'll talk more about a 401k. A 401k is so I'll get to that in just a minute, but let me just go to this title. Your perfect investment starts with your 401k. 401k is actually a paragraph title in the IRS code. So remember, the second law of personal finance is the law of tax-advantaged investing. So next week, we're going to talk about types of accounts, and that's really important in terms of building wealth. So we'll do that next week, and we'll talk about your 401k, how it works. If you don't already know, though, I would encourage you. Many of you are working ahead, doing your assignments early, doing them even before I post them in Canvas, and that's great. But what I would encourage you to do this week, if you want to be ahead, is just start to consider types of accounts. When I say 401k, when I say IRA, when I say Roth IRA, many people think that a Roth IRA, for example, is an investment, and it's not. An IRA is not an investment. A 401k is not an investment. These are all types of accounts. And you need to understand different types of accounts if you want to take advantage of the IRS code. So again, the second law of personal finance is the law of tax-advantaged investing. The IRS makes the law. Our job is to take advantage of it. And to do that, we have to put our money in certain types of accounts so that we can reap the benefits of those accounts. And that's what happens with a 401k. So I am talking about a 401k now. In a minute, I'll talk about a 401k, but I want to first just kind of highlight that dollar cost averaging is another one of those strategies. It's my favorite one. I think dollar cost averaging is, let me see if I can put the right, yeah, dollar cost averaging. Let me just talk about that for a minute. I'm going to introduce it, and then we will just jump in and start talking about. We'll start with 401k, and then we'll move on down the list just to give you a kind of an overview. But dollar cost averaging, it's one of the 4 investment strategies designed to help you maximize returns and minimize risk. So I'm hoping that